Hello and welcome to the Weekly Forex Outlook at XM.com. Next week, the U.S. inflation report will be in the spotlight, and the question is whether the data will bolster Fed rate cut bets. But that won't be the only thing driving market sentiment, as we may also get a decision from the U.S. Court of Appeals on the tariff ruling, and potentially hear about developments in the trade negotiations. In addition, Chinese trade data and the U.K. employment report and GDP figures will also be closely watched. I'm Maria Bashardis, and joining me to unpack all this is lead market analyst Rafi Boyadjian. So Rafi, over the past few months, there has been a decline in U.S. inflation. What are we expecting from Wednesday's CPI report for May? And how might that data affect Fed rate cut bets and the dollar?
Well, Maria, like you said, we've seen some improvement in the U.S. inflation picture. Nevertheless, the Fed has kind of remained very cautious regarding the timing of the next rate cut because we haven't yet seen the impact of the tariffs coming through. And that might start to happen for the month of May, when we're going to be getting that data next week because, of course, we had seen some front loading of imports, which meant that we didn't really get significant price increases, but we may start to see some impact in May. Of course, we've had a lot of the tariffs come down. The reciprocal tariffs are on pause, and Chinese tariffs have come down substantially following that truce agreement. So there's a bit of uncertainty regarding what we might get, not just for May, but for the coming months as well. But it does look like we are going to be seeing potentially the start of a reversal in this disinflation trend in the coming months. And according to the Cleveland Fed's nowcast model, we're expecting headline CPI to rise slightly from 2.3 to 2.4%, but the core figure to stay unchanged at 2.8%. So, based on the data alone, it suggests that the Fed will probably stay on pause at least until September. However, the problem is that we are now starting to see some weakness in the U.S. economy. We're seeing some weakness in the labor market, we're seeing weakness in manufacturing, and now in the services sector as well. So if we only see maybe a modest pickup in inflation, but the other data, surprises to the downside, I think that's going to boost rate cut expectations. But of course, until we get a very bad data, whether it's jobs labor market related or GDP related, I think the Fed can probably afford to stay on pause for a little while longer. But nevertheless, that's not going to stop the speculation. And so unless we get a strong CPI report, I think the market bias will be to price in more rate cuts, and that's going to keep the US dollar under pressure, but potentially it's going to keep risk appetite alive on the hope of lower borrowing costs in the not too distant future.
Turning to other market-moving events, we may get a decision from the U.S. Court of Appeals on whether they will permanently overturn the U.S. International Court's ruling to block Trump's reciprocal tariffs. Can you tell us more about that and the likely market impact, and also provide us with a brief update on the trade negotiations? Any new developments there?
Yeah, so we might get some updates on both fronts next week. So we had, of course, the International Trade Court's decision that blocked President Trump's reciprocal tariffs, but then that was overturned by the appeals court. Now, the appeals court gave the two sides some time to present their arguments, and those arguments would have concluded by June the 9th. So we're assuming that in the days after that, we're going to get some kind of decision from the appeals court. Now, whatever the appeals court decides, probably is going to head to the straight court, because I think, the businesses, small business that brought the lawsuit, or the Trump administration, they're both probably going to challenge the appeals court decision in the Supreme Court. So we might not get a final answer. And if the appeals court, rules in favor of Trump, then that's not going to change the status quo. So we're not going to see a huge market impact. But then should the appeals court, though, decide that actually the lower court was right in blocking Trump's tariffs, then that might boost risk appetite a little bit, because of course it's not going to be over even if that does turn out to be the case, and then it could potentially drag on, or even encourage Trump to come up with alternative ways to impose tariffs. So it's not really going to be over. So at best we're only going to get a slight boost in market in risk appetite, but of course the other thing we should be watching is the trade negotiations, because of course we do have a G7 meeting coming up in just over a week's time. That's going to take place in Canada, and now we're seeing reports that in fact Canadian Prime Minister Mark Carney has been in direct talks with Trump to try and resolve the trade dispute. Potentially we might get a deal by then, or maybe even before, and the same applies to Japan as well. So there's a slight optimism that we might get some developments, some positive developments in the coming days, and if that does turn out to be the case, definitely I think that would be beneficial for both the US dollar and as well as for stocks on Wall Street.
Moving to China now, has any progress been made on the trade talks between President Xi and President Trump? And what are we expecting from Chinese trade data for May, due out on Monday?
So, of course, the other sort of important negotiation here is the one with China. And we know that President Trump and President Xi did finally hold talks. They had a phone call to try and basically de-escalate the tensions between the two countries. But, you know, this is basically just kind of taking things where they should have been in the first place, which is for the two sides to be talking to each other to negotiate some kind of a trade agreement. So it's not really progress in the sense that we're getting closer to a deal, more of a progress in the sense that the two sides are basically talking with each other. Nevertheless, I think, you know, obviously it's good for the market, it's good for sentiment, it's going to keep that optimism alive. But then we should also be keeping an eye on the incoming data out of China. So we might get, it's going to be interesting, first of all, to see what kind of an impact the tariff truce had on trade, because this data did come in the middle of the month, so it might be distorted. So if we do see a stronger than expected growth in Chinese exports for the month of May, I think that's going to suggest that there was a quick rebound in exports following that trade truce on May the 12th. But on the other hand, if you get a weak number, it's going to suggest that the uncertainty continues to weigh on businesses. And also we should not forget Chinese inflation, because China is kind of flirting with deflation at the moment, and this situation began well before the trade war. It's down to big domestic demand in China, so I think we shouldn't totally ignore this data. But on the whole, I think the key driver here, whether it's you know, for the stock markets, whether for the China sensitive Australian dollar, it's going to be really more to do with how the trade negotiations are going to pan out over the coming weeks.
And finally, over in the UK, the employment report for the 3 months leading up to April will come out on Tuesday, and the April GDP print will be out on Thursday. Is any of this data likely to impact the pound?
So in the UK, we are seeing a fairly resilient economy, which is, of course, positive for UK assets, for sterling. But the problem here is that the Bank of England remains very cautious. Inflation has started to shoot up a bit, mainly because of energy prices and higher food prices, and also the fact that in the UK we've seen an increase in employers' tax on workers. So some businesses may try to pass on that cost onto the consumer. But as long as the economy holds up, I think that's going to ease fears of stagflation. But the key thing here is what's happening to wage growth. Are we going to see a pickup again in wage pressures, or are we going to see a gradual climb down? And that's going to be important for Bank of England. They're going to be watching this closely to assess whether they're going to be cutting rates anytime soon, because most likely they're going to be staying on pause over the summer. And of course, from the trade front, UK is kind of sort of been cushioned from the trade war for the time being. At least they've signed a preliminary deal with the US. The UK is also trying to sign better trade deal with India and the EU as well. So it's hard to kind of see what the overall impact of both the trade war as well as, of course, domestic factors are going to be on the UK economy. So definitely we should be watching the data, but I think we might not get anything too conclusive in next week's numbers. And as with most other currencies, I think for the pound, the key thing here is how whether the US is going to be sort of signing additional trade deals with other countries. Are we going to see further de-escalation, or are we going to see another flare-up? So overall, I think sentiment is going to be a bigger driver for sterling over the coming week.
Rafi, thanks so much. This was the Weekly Forex Outlook here at XM.com.